There was a very interesting presentation, if you like, by John Pierpont Morgan back in 1912 to Congress. And I don't know what the question was, but his answer was quite simple. And that is, money is gold and the rest is credit. Now you might think that that was just an opinion of JP Morgan, but actually it is a legal fact. And it's forgotten nowadays. I mean, so much so that modern economists think that gold is a pet rock, or it's no longer relevant, if you like, to the modern monetary system. Money is gold and silver coin or bullion. That is money. Nothing else is money. It's as simple as that.
So the purpose of the central bank or the Fed, they pump out fake money. The purpose of central banks like the Fed is to protect the banks, not you. They're a criminal operation as far as I'm concerned.
The interesting thing about gold, I recommended it at $1,100 an ounce, US, $1,200 an ounce, $1,300 an ounce, $1,400 an ounce, $1,500 an ounce. And people come up to you after the presentation and they say, Jim, I listened to you carefully. I agree with everything you said. I see this disaster coming. Please call me like 3 o'clock the day before and I'll sell my stocks and go buy some gold. And I have a two-part answer to that. One is I'm not going to know the day. I can tell you how bad it's going to be, but I won't know the exact day. And if I did, I might be a little busy that day myself. But my real answer is, what are you waiting for? If you agree that this kind of collapse is coming, why wouldn't you buy your gold now? First of all, at a more attractive price. Secondly, when you can get it. And the other warning I gave was that when you really, really want your gold, when you want it the most, you won't be able to get it.
Governments never stop printing more currency and adding currency to circulation. Therefore, prices keep on going up, not because the stuff that you're trying to buy is changing. The real estate doesn't change. What has changed is the currency purchases less and less. It's the currency going down, not prices going up.
Now, currency is a circulating medium which is used for the buying and selling of goods and services. Banknotes are basically, if you like, a debt. And so a bank, they're dealers in credit, and they create loans and deposits for interest profit. It's important to remember that. They do not have a role in society as a social something or other. We've had these cycles ever since banking was invented. Why? Because you get a cohort of bankers who all think the same way. When they see the economy is picking up, generally as a result of an earlier expansion of bank credit, it gives them confidence to increase their lending. And by creating this credit out of thin air, what they do is they increase the leverage on their balance sheet relative to the bank's own capital. They don't lend their own capital. No, they just create credit on top of it. That process continues until the consequences of the expansion of bank credit are that prices start rising. We call it inflation, but in fact it's rising consumer prices, reflecting fall in the purchasing power of the currency. And when that happens, the bankers see this, so they start restricting the amount of credit that they lend.
Gold's track record is clear, and so is the US dollars. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the best gold IRA and gold investment companies that we have personally researched and vetted. You have nothing to lose, but you have wealth to keep. Thank you for watching.